The changes in the monetary policies of central banks around the world are affecting a very particular victim, green technologies, especially wind and solar. Today, I will explain why green energy generation projects have ceased to be viable and are at risk of disappearing, with a few exceptions, if a significant technological development does not arrive soon. Despite the fact that the overall market is having a positive year, with the S&P 500 and NASDAQ increasing by 11% and 26%, there is one sector that is experiencing significant losses, and that is green energy investments. ETFs related to solar and wind energy have lost 20% or even 30% of their value year to date. But why is this type of energy having a tough year when the market has performed well and its main competitors, fossil fuels, have significantly increased in price? To understand this, it's important to differentiate between two types of energy generation projects. On one hand, there are projects where the initial investment is relatively low and the costs are associated with operation. In other words, the investment is mainly made after the project is in operation. This is the case with thermal power plants, where the price of coal, oil, or natural gas is the main determinant of the costs the project will incur and whether it's profitable or not. On the other hand, there are projects where the initial investment is substantial and operational costs are minimal. This is the case with green technologies, where the cost of constructing a wind or solar farm and connecting it to the electrical system is incurred up front. Therefore, a large amount of capital is needed to carry out these projects. For several decades, this was not a problem, and the cost of money was excessively low. A project of this nature did not need to deliver high returns to be financially viable. Governments, individuals, and companies could obtain resources for projects at very low interest rates and finance them while still making profits. However, everything has changed dramatically. Demographic and trade transformations, as I've discussed in other videos, have led to a resurgence of inflation worldwide at levels not seen since the 1970s. This has forced central banks to raise interest rates to combat this inflation, resulting in lower availability and higher capital costs. This situation has two very important implications that affect these types of projects. Firstly, financial costs have increased significantly, causing the profitability of many projects to be negative or close to zero in some of the best cases. Secondly, it has created a significant opportunity cost. While in the past, a green energy project that yielded 8% per year, for example, made sense, now the interest costs make that 8% decrease or not compensate for the risk for investors. They might prefer to invest that money in treasury bonds, which pay 5% per year, but with a fixed return, no risk, no setbacks, and the ability to scale their investment at any time. But is anything being done to address this situation? Before I continue, I'd like to invite you to subscribe to support the channel and stay updated on our new content. Some governments have chosen to subsidize these projects to ensure their construction continues despite the increase in the cost of capital. The United States, for example, has done this through the Inflation Reduction Act. However, it's not such a simple solution. Firstly, because the cost of governments to obtain resources has also increased, causing many of them to reconsider the construction of these projects and opt for other alternatives. Not to mention that it's nearly impossible to fill the gap left by the private sector when it withdraws from these types of investments. Secondly, because the projects rescued with subsidies are often not viable or environmentally ideal. Because even though the operation of these projects does not generate significant emissions, it doesn't mean they don't have a carbon footprint. It begins with the mining of materials like silicon, aluminum, and copper for panels and steel, copper, and aluminum for wind turbines. This process continues with transportation, production, and finally installation for a limited lifespan. This means that if a project is developed in an area with little sun, wind, or is far from homes and businesses where this energy is consumed, it runs the risk of having a large carbon footprint for the energy generated, making it environmentally impractical on its own or compared to other projects with a better cost-benefit ratio. All of this has begun to impact the construction of new wind and solar farms, in addition to jeopardizing the viability of existing ones that are nearing the end of their useful life and will not be financially viable to renew. Furthermore, it is affecting the investment made in the development of other alternative energy sources and in improving the current production of solar panels, energy transportation, and batteries. And while it's not the end of green technology, it is essential to recognize the significant blow it is enduring, which could imply not only the loss of viability for many projects, but also a setback in innovation in this field. Now I would like to hear your opinion on something. Do you think subsidies should focus only on innovation? Should there be no subsidies, or should subsidies in innovation and new projects continue? Please share your thoughts in the comments. Also, if you want to better understand why changes in demography and trade have created an environment of high interest rates and high capital costs, I invite you to watch this video next.